we're going to call JC Parets. He is the founder of Eagle Bay Capital. He's a 10-year veteran of the markets and a
Hi, this is JC.
Good morning, JC. Welcome to Pre-Market Prep. I'm in for Joel O'Connor today, along with Dennis. How are you doing this morning?
I'm doing well. I'm doing well. Thanks for having me as always, guys.
So the world's a better place this morning here, JC. Greece approves the deal. Market's flying high. We're approaching new all-time highs here. What are you looking at, JC? And technically speaking here, where do you think we're heading?
Well, you're in regards to what, the S&P 500?
Overall market, S&P futures.
Yeah, I mean, we're still in this range. I mean, I hate to be boring, and I hate to, always say the same thing, whenever we get on Thursday mornings, but there's nothing to say. I mean, we've been stuck in this range, since February, and there's really nothing to do, long or short. Anybody who's been trying to mess with this market's been getting chopped around. Maybe more recently with the added volatility, day traders have been doing well, but anyone with any sort of intermediate term horizon, it's been a chop fest, and there's nothing, there's no resolution out of this range, either to the upside or the downside, and we're right in the middle of the range. I don't see anything to do.
What do you think of the
Continue to stay
overall?
away.
Okay, but the U.S. markets here, and I was just talking with a friend of mine, Andrew, there last night, and we were talking. The rest of the world is in so much trouble, it seems like. China is still a mess over there. Japan's been in a 25-year recession. Europe, okay, so we kick, the Greece, we kick a can down the road a little bit longer here, but they're still kind of in crisis mode here. Isn't the U.S. markets kind of the best place to be, and isn't that why we're only like 1 or 2% off our all-time highs?
And yeah, you make a great point. Yes, is it the best place to be? Sure, but you're still not making any money. So it's not about, right? You see what I'm saying? It's not about being better or than one. I mean, yes, that is true, but at the end of the day, the only goal here is to make money. So to say that you're not losing as much money as everybody else means absolutely nothing. So you're the best loser. I mean, it doesn't make any sense. So yes, the U.S. is doing better. So what? It doesn't mean we should buy it.
What are you buying then? I know you're always buying something, JC. I know you're buying something back there, so we got to get it out. What are you buying?
Yeah, I do like, I do like bonds down here against those lows. I still think you could be long the TLTs against the lows that go back to June. I still think we mean revert back towards 123 on the TLTs, and the risk is very well defined. We only want to be long above these recent lows. So, we got down there close to it, at the beginning of this week, and, kind of got a little bit of a rally yesterday as yields fell off. And I still think we head back up towards 123, that area on the TLT. So I do like that. Some of the agricultural commodities and stuff have really been doing well. Corn has absolutely exploded over the past month, so that's something that we want to be buying on pullbacks. Cotton is setting up as well. This has been building a nice base over the last year. I don't think it's quite ready yet, but that's something that we want to be stocking. Shorting gold miners is always one of our favorite things to do. As soon as that broke the uptrend line from the November lows, a couple weeks ago, that was an easy short because the beauty of it and beauty of this is that it's such a nice trend. One of the things that I hate about the S&P 500, and I get that you guys need to ask me about it and people like to talk about it, but that's dead money. It's been dead money. Anybody been in there, they're either, they might tell you that the S&P is up 1% or 1.5% or whatever it is, but if you're trying to trade that thing, you're getting chopped around and tossed around like a rag doll. Gold miners are in a beautiful trend. I mean, these things have been trending for 4 years now, and, if you can take advantage of a continuation pattern like what we've seen since the fourth quarter, and when that resolves, you can go ahead and start shorting it again, I think that's the smart thing to do within the context of, an ongoing downtrend. I'd be covering those shorts down at the 2008 lows, right about $1 from where we currently are. And I think that's where we're heading.
You know what? I
not
completely
necessarily
agree with
buying
you.
it, but I'm shorting it. But, it doesn't matter for us, long or short. We don't care.
Yeah, we don't care either. I completely agree with you on the gold market here. And you know what the tell was for me when you had that the SP futures just a week and a half ago or 2 weeks ago, they thought they weren't going to get the grease deal and they were getting killed. Everything was getting killed that one day, and gold does not even catch a bid that day. And if gold can't catch a bid when the world looks like it's in shambles, when is it going to catch a bid? I mean, and who wears gold anymore? Like you don't even see people wear it as much anymore. Like I don't wear gold. I know my wife doesn't wear gold. I know there's still some people that wear gold. If you like gold, great. But I don't even think it's as, as cool to wear anymore here. So I don't really get, the gold market here anymore. And it's concerning to me that it's now breaking down to multi-year lows. And when you start seeing, the GLD trading at multi-year lows, and like you said, all these miners breaking down here, the trend is your friend in this case. So I completely agree with you on this one, JC.
Yeah, and you want to know something? I don't know who made up this lie that gold has to go up because Greece is I don't know Greece's stock market's going down or closed. Like I don't know what one has to do with the other. I'm not sure who made that up, but it's clearly not true. Want to know what the tell was for me was platinum. When you see the more volatile, the more speculative precious metals, they tend to be the leaders. They're the ones that tend to get hit first. And platinum's been rolling over, making new lows all year. And when they broke down a couple of months back, I mean, that was the tell for me that gold and silver were coming next. Me personally, because I like to look at them all. That of all of them was the cleanest one. When we talk about how when you look at the large cap stocks, for me, looking at the S&P and the Dow doesn't make much sense in this particular case because you don't really have very clean overhead supply. In the NASDAQ 100, it's much cleaner. So if you really want to look at a market index, in my opinion, you want to look at the NASDAQ 100 because it's the cleanest of all of them. In the case of the precious metals, we had the same thing in platinum. It was the cleanest. Gold and silver were messy. Platinum was the cleanest one. Once that broke, to me, that was the tell that precious metals were heading lower. And quite frankly, it shouldn't be surprising because that's been the trend for the last 4 years. So the trend is your friend, like you said.
JC, I noticed that you were tweeting before you came on our show this morning, and you were looking at Intel. Of course, they just reported earnings last night, and I know you don't really follow their earnings reports, but what are you looking at Intel right now?
This has been a big key support level, right this area right around 29. And it actually goes back further. And I do look at Intel very closely because it's a Dow component. You guys know how seriously I take my Dow components. These actual lows go back and are actually the highs from 2012. So this really isn't, I'm actually pulling it up to see what the bid and the ask is doing this morning. Is it doing much?
We're up here, but JC, last night, this
It's
Intel.
about a point. It's about a point.
Yeah, but last night, last night, believe it or not, this stock trade up in the after-hours session to $32.43 on that initial. Just shows you how like pandemonium comes in. Oh, it's a beat for Intel. Let's buy the stock up 10% here after hours. These earnings overshoots can be crazy here sometimes, and this stock spiked up to 32.43 quickly within an hour, gave the majority of those gains back, and we are trading up here this morning, still trading up 30.47, and this seems reasonable to me. But who buys these things up 10% at $32.5 there last night? Like who's doing that?
I got buddies that trade after hours, and these are illiquid markets, and you're talking about Intel, one of the most liquid stocks in the history of human civilization. Yeah. And then after hours, sure, there's liquidity, but there's not as much liquidity as you have intraday. So yeah, you can get some buyers coming in and drive them higher. And some of my friends, they have a field day after hours, good or bad, but they're slinging around. I mean, that's not my game. Me personally, I like to keep my life easy. I see this key level right here, right around 29. That's been support since last year. That was resistance in 2012, in early 2012. I'm looking for a breakdown there, and you short it. Any strength into 33, 32 and a half, 33. I think you sell that. What was the high last night? I shouldn't be surprised.
32.43.
Sold off from that level. 32.43. There you go. What I say, selling to 32 and a half, 33. There you go. So that you got downward sloping 200-day moving average there. You got some former supply around that area. So I think that's a good area to be selling. I'm not shocked at all. That's where it reversed last night. But me, I wouldn't want to be on the buy side here for a mean reversion. I'd rather be shorting a breakdown if and when we get it. So if we start taking out the lows since October, that was retested successfully in March, and now more recently in the past couple of weeks, I think to short that. And I think, with a measured move, I think you got, you can have a 10, 15% move to the downside if we get that break. And I don't believe in triple bottoms. And, this is the third test. Like I always tell you, triple bottoms where I grew up, they don't exist. They're unicorns. So if we do break down, and I think the higher likelihood is we do, that's where we want to be short. But we only want to be short if price is below all of this support. So it'd be nice. I would love for this thing to go negative and give back all of the gains from yesterday. I think that would be the best case scenario, because it would really, really, truly show us and prove its weakness. And then we short the breakdown.
JC, what about Apple? I know a lot of people are just kind of sitting and waiting with this one because we are going to get their earnings report next week. But what are you seeing in Apple right now?
The same thing. We keep talking about it, and I hate to be, so boring. But I've been saying since February, our target was 129, and there was a reason why that was our target. We had multiple Fibonacci extensions clustering there on multiple time frames. I mean, it was as clear as day. And if you ignore that, you've been sitting in dead money since February. So I love the fact that, it's been boring and everybody's been, getting chopped around, because that's what should be happening. I figured that if you could have made an argument in Apple, going into May, and I did make the argument actually that, this was looking constructive, and this sideways consolidation since hitting our targets of 129 was a bullish setup, and I said it myself. And, an upside resolution out of that base since February would be extremely bullish. That would take it, north of 140, 145. I think that would have been great. And then it just started taking too long. And, we like to see the market. The market tends to be very symmetrical. And, when you have a consolidation that fits the size of the previous move up, that tends to be healthy and continuation in nature, no doubt about it. That's technical analysis 101. But when these things start taking too long and it loses that symmetry, in all likelihood, that theoretical bullish continuation pattern that we all see is not that, and should lead to a breakdown. That's exactly what we were writing, to all of our research subscribers and all of our investors, and basically telling them, hey, listen, it doesn't look like it's going to break out. It's taking too long. It's probably going to break down. Head down under 120. We have a 119 target. And sure enough, we broke down and we hit that 119 target last week. So we couldn't be more thrilled. I will say that I do like the fact that we quickly reversed after hitting that target and now back above it into that range. So was that brief breakdown and retest of resistance from last year the catalyst necessary to take this on to new highs? It very well could be. I'm not really ready to make that bet just yet. I still think it's got some work to do. Will the earnings be the catalyst to take it above that? I'll tell you this right now, the best case scenario, and what I love, is when you have clear overhead supply and the market takes care of that overnight in a catalyst like a buyout or earnings or, any sort of, press release that, moves markets overnight and causes a huge gap. If we can gap up above all that overhead supply around 132, 133, I think that would be extremely bullish, because it's kind of like a gap and go. You gap up above that and you run. And if we do get that and it opens up there, we only want to be long above all of that overhead supply. I'm not saying that's going to happen, but if it does, you've got to be all over that. You've got to be buying that.
Well, maybe the earnings report could be that catalyst there. Let's move away from boring here for a second, and let's talk exciting, because Netflix comes out, and actually here the subscriber metrics were good, and they always find a reason to buy this stock. It seems like no matter what. Looking at it here this morning, trading up 12.5% here pre-market. So those who were shorting it post-split had one day of fun, and now it's all pain if you were shorting and holding this thing overnight into the earnings report. Netflix here, I know you gave the $700 price target originally when it was back at $600. That was a great call, JC. Do you have another great call on Netflix, or are you hands off?
Yeah, it's not for me. I liked it when you guys were asking me about it before, pre-split, we were looking at, seven hundred, 710, something like that was our target. We hit that, and there's nothing really to do. You guys know me. I'm not flipping coins before earnings. That's just not my game. I see people get destroyed doing that. Sure, had I been long Netflix going into this earnings release, would I be happy right now? Of course. It's just not what I do. So I'm not going to do that. If you're in it, great. I'm a seller. Just because it hit our upside target, not because I think you should short it. I just think it's a fade. And if it keeps going higher, great. But it's not our problem anymore. It's one of those things where you set your target. The target is achieved. And by the way, when we had those targets, like you said, the target was 150, 200 points away from when we first started talking about it. So it made a huge move in order to achieve that target. And that target is achieved. So it's almost like it's not our problem anymore, especially going into earnings. That's not for me. So we're sellers.
We've been on the line with JC Parets. He's the founder of Eagle Bay Capital, and he joins us every Thursday morning. JC, thank you for sharing your thoughts today. We always love hearing your insight, and we'll have you on again next week.
All right. Appreciate it, guys. Have a good one.